Setup Monday here, BraveNewCoin. It's a beautiful rainy Monday where I'm at. Nice and chilly. Let's take a look at the charts and the metrics. What matters, what doesn't, at least in my opinion, for the week here. Starting with Bitcoin. And Bitcoin's at an interesting spot. I don't think it's bearish by any means. I think funding is fine. I think it looks poised for mega bullish continuation. Everyone's looking at 100K, six figures at this point. I don't think there's any worry about any of that. Obviously, you can min-max your position and sizing on any pullback. You can either eat any downside and just keep buying. You can decide on where you want to place bids, where you want to add, where you want to subtract, whatever. But I think at the end of the day, over the next couple months, you'll be fine, kind of regardless of what you do. Based on the cloud, this TK separation, TKC clamp is starting to form. The longer this goes sideways at 65 or 60 to 70, whatever it ends up being, the longer it goes sideways, the more likely you're going to get a pullback to 53. So if you're turbo ultra bullish 100x long, you don't want to see any more sideways. Obviously, you want to see this break higher highs, break new all-time highs, break 67. If you're not in and want to get more, or you want more in general, 53 would be the place that I'd be looking. And yeah, I know that's a 10K drop from here, but that's some 50% fib from local high to local low. And that's why the cloud is putting that level there. You can also look at this with a pitchfork and say to yourself, okay, I'm not going to add or buy more until we're out of this range. If we break down, obviously it'll hold in the pitchfork longer, but if it breaks up, that's just another way of saying it's in price discovery, but that's a way to help quantify it. It doesn't always line up like this where the range bound pitchfork is the all-time high. I'm also watching VPVR here, the volume profiles. We don't want to lose 54. I'd like to wick to 53 if we do get down there, but you definitely don't want to lose all this volume. Hopefully it's support at this point. And then 45 to 47 would be the next level down. And then based on this pitchfork, the halfway point of this range is around 45 to 46. So these are all levels you don't want to lose. If we start to lose those levels on the way down, then I'm wrong and we get more and more bearish or just more range bound in Q4. So that's like your counter thesis to my being ultra mega turbo bullish. If you're bearish, obviously you want to see all those levels break down. I just don't think it's going to happen. And then if we break this 30 to 40, which I don't think will happen until mid Q1, if it does happen, that's when you know we're in actual trouble, like multi-month trouble. I think in here we're in multi-week trouble if we break these levels, if we break 50. If we break 30 to 40, we're in multi-month trouble. RSI still not in overbought territory yet, still no bear divs. So to me, everything looks completely fine. Ultimately, again, on the weekly, just another way to reiterate everything else I'm saying. The previous weekly put in a shooting star candlestick. That's what it's called here on this red one on the previous weekly close. So it doesn't immediately mean we're bearish here. It means we are getting ready to lean bearish if we close this week below the previous week's candlestick. If we close below the previous week's candlestick, then we're very likely headed to lower than 53. If we can stay in the range, we're neutral, that's fine. And if we break above the wick, which we see fairly often, then we are definitely headed for bullish continuation based on probabilities at that point. You can see another example of a shooting star or inverted dragonfly here in April 2019, how that played out. We closed above it in the week after and then eventually consolidated and broke down. So what we don't want is this multi-week descending triangle. You don't want momentum to slow down. You don't want momentum to be crazy fast. We had 3 weeks of insanity, right? It's fine that we're ranging here, but these are all things to watch for this week and the week after. Tweezer top would ultimately be the worst thing, I think. So here's an example of a tweezer bottom. We have a wick, and then the second wick doesn't surpass the previous wick. So what we don't want this week is a lower low or a tweezer top. So the opposite of this. It just says, be ready. Have your wits about you. Certainly not bearish by any means, but definitely something to watch, and that could all be canceled out with any higher highs. Something else I'm also watching is the 4-hour chart on BTC. As we trend on kind of anything, the 4-hour, for crypto at least, does really well on the cloud. And you can see breakout here, break down here as far as when to open and close. If I'm trading on leverage, like high leverage, I'm watching the 4-hour very closely, and I'm paying attention to entries on the Kuma breakout. I'm paying attention to closes on the TK cross here. And let's say you got in here, got out here. What's the next step? Well, you'd be waiting for a bullish TK recross, which would be above the cloud at this point. So that's a mega bullish continuation sign. That's certainly something you can watch for if you're trading at higher timeframes as well, just to be confident that this is going to have another leg. But let's say it does have a bullish TK recross above the cloud, then yeah, there's again a very likely probability that we break up or continue to break up at that point. That would be past all-time highs. So 4 hour to me looks good on BTC. Something else that's worth looking at every week now, as well as the 2-year MA multiplier. I'm backtesting. This thing is deadly accurate. You can see how it hit the exact all-time high at the time in February. I'm backtesting this to exceed it slightly or for multiple days, weeks, whatever. But the point is, this is the level that if you're bullish, you should start to get nervous if we get up there. Currently, the midpoint is at 75. So if we can break 75, the probability that we actually reach for the multiplier, so this is the 2-year MA, this is 5x multiple, this is the midline. If we break the midline, the probability we reach for the multiplier is extremely high. So you definitely want to watch 75 closely. If we start to break down at 75, that could get ugly. So that is a key critical level, as they like to say, whatever the midline is at the time when we get there. So 75 breaks, we probably go to 130. And that's just kind of where it's at in my head, but I'm watching this every week, just get a barometer. Where are we at? Okay, we look fine there. MVRV is another one. Just watch it every week. You know, there's like 4 charts you have to watch for BTC every week. It's not hard. Watch the 4 hour, watch the daily, watch the weekly, watch 2-year MA multiplier, watch the MVRV. This is measure market cap versus realized cap, and historically these spikes in MVRV Z-score have correlated basically 100% with all-time highs in price. Currently it's at 2.3 and declining, which is incredibly bullish. It says we have tons and tons and tons of upside. So where we sit here, I'm not worried at all. Looks fine. Pi Cycle is another one that I'm backtesting. You know, you can hate it. You can think it's junk. You can think whatever you want to think, but I'm backtesting. It has never been wrong. Never been wrong. Not a lot of data, not a lot of data points, but every single all-time high historically has been accurate, you know, the 3 to 10 days, whatever it is, as far as pulling back. So again, here we're nowhere near the cross here. We got tons of room for upside. So something to watch every week. What does it look like? Hodl wave's another one. For me, it's basically 100% accurate on seeing where we're at in a cycle. If we zoom into all-time highs versus a percentage of the chain moving in a specific period of time, in the past 6 months in this case, you can see that when we've moved 50% of the chain in the past 6 months, that has been the highs of price. You could argue some declining trend line here, but the point is we're still descending on the 6-month hodl wave. So there's still virtually no coins moving anywhere. This is picking up slowly on lower time frames, 1 to 3 month time frame, 1 week to 1 month, etc. And you're going to see this ramp up slowly over time and crescendo very likely at around 50% when we hit the top. So plenty of room there. Not worried about that at all. Everything looks fine. You know, you're better off, for most people, buying, holding, looking at this stuff once a week and then just forgetting about it. ETHUSD have probably, this is probably the second most bullish I've ever been on ETHUSD. The first most being 2017, when there was that ascending triangle chart pattern. But this looks like a textbook cup and handle. Volume looks perfect, picture perfect. You want to see dead volume, declining volume, nothing volume, boring volume, nobody cares volume. Perfect, right? This could not look better for breakout potential, because what you're going to see once this breaks all-time high or starts to in a bigger way, you're going to see volume come in, ideally, to confirm this chart pattern. And I think 6666 is the place where ETH is headed in the near term. Honestly, could be this week, as soon as this week, but definitely within Q4 parameters. I think that's where it's headed. And once you're there, we'll see what it looks like. But I like 6666. That's also the midline for the 2-year MA multiplier. If it can break above 6666, I'd like 10 to 11K or above that, wherever it ends up being when it gets there with the multiplier. But this thing is sitting at all-time highs, ready for price discovery with no volume yet. So that is a big recipe for explosion in my mind to the upside. So that looks great to me. ETHBTC, however, looks more and more like an Adam and Eve, like it did here. Not as robust or as confident as it was here. You know, this is probably the most textbook, cleanest Adam and Eve you're going to see in crypto. What I'm talking about here is a V and then a U. and then a breakdown, inverted Adam and Eve. Here it just looks like a garbly mess, but I remain bearish on this until it can break highs, right? Until it can break highs, there's a very high likelihood that this breaks down, goes back to sub 05. Definitely an if this then that situation. I don't trade this directly. I think it's insanity if you try to trade this directly, but that's what I'd be watching. Does this break lows? Okay, great. It's probably going to point. Honestly, it's probably going to 0.04 if it breaks lows here at this point in time. And if it breaks highs, probably 0.1. Yeah, I don't have a specific target on the upside, but you can measure the fibs on this. But this 0.5 retrace from all-time high to 2019 low is probably a very large resistance that you're seeing play out. So I don't like being bullish on ETH/BTC. Dominance started to pull up, started to double bottom, starting to wane a little bit here. Ultimately, you want this above the 200-day moving average if you're super bullish on BTC relative to alts. Alts catching up a little bit here over the past couple days, but ultimately I don't think there's anything to worry about for either chart on the USD pair. For DeFi perp, you're getting a bullish TK recross with price above cloud. You held above the 200, you held above the cloud, you held above VPVR. You're now above price resistance since February. I think DeFi's looked the most bullish it's looked since November last time this year. So fairly heavily confident that this is going to reach for all-time highs as well. Based on trend metrics, it looks super clean. Is it going to outperform ETH? Is it going to outperform BTC? I don't know. I'm not so sure on that. But on the USD pairs, it'll be fine. Just like Solana, it'll probably be fine. You're better off waiting for more consolidation. At least there'll be more upside if this consolidates, right? This consolidated for 5 to 6 months or whatever it was, and then had its 200% move, 7,000% move, whatever it was. You know, this has only consolidated for a couple months and is already back at all-time highs. That's fine. You see that in bullish markets where consolidation gets shorter and shorter and shorter. The legs get more explosive, more explosive. I would just much rather trade ETH here than Sol. You can look at that, a relative pair as well. My guess is, I'll pull it up. Let's pull it up. Because my guess is ETH is at a relative all-time low to Sol or local low or something like that. So for me, that would be a good time to rotate into Sol or into ETH at this point. So Sol is at all-time highs relative to ETH-ish. You know, it's got this Adam and Eve fractal-ish. You can see these. Here's a W. Here's another Adam and Eve. You can see these fractals over and over and over again, but another W. I guess you have to ask yourself, what is the upside of Sol in your mind relative to ETH's upside? If ETH's upside to you is 6666, take that percentage and then take it relative to what you think Sol USD can do from here. Can it 2x? Can it 5x? I don't think it can 5x, but I think it can do well. I think it can go to 320, 330, 3333 maybe, but I don't think it's going to outperform ETH necessarily in the near term, at least in my mind. Tezos also riding the struggle bus. It had this previously had this head and shoulders potential that it canceled out because it broke above the right shoulder. It hit a new all-time high. Now it's pulling back. Just another mess of a chart that I think if you're confident in the upside here, you just ignore the chart and you let it do its thing. You ignore the fact that you're going to lose money against ETH and BTC, and you're hoping to hit like the jackpot, right? You're hoping that this thing 3x's or something to save yourself relative to BTC and ETH. But otherwise, this chart is a mess of a chart. I guess you could argue cup and handle eventually, but you know, it's such a mess. I'd just rather ignore it and just hold what I have and let it do its thing. Lots of people talking about Luna, asking me about Luna. Similar to Tezos, it did have a diamond top type of reversal-y pattern that it broke up from, so it canceled out the bearish reversal. It still looks like a mess to me. You know, it looks like ETH/BTC. This thing might do well. This thing might break up, but for me, the trades are much easier on ETH and on BTC as far as what to do, when to do it. The if this then that decision tree is super clean. It's got tons of leaves. It's turning colors. It you know, I know exactly the process here. I can track it. Whereas Luna, I have no idea. The tree is kind of dead, missing some branches. There's termites, you know. It's very hard to tell what to do here with Luna. I guess you could just say add or buy at all-time highs and then rebuy at whatever the 50% retracement is, probably around 16 to 19. I don't know. So yeah, this can do well. It's just as a trader, I'd rather trade stuff that has a cleaner setup. I mean, this setup on ETH, wherever it is, this cannot get better. This cannot get better. I think there's like a less than 5% chance that this even breaks down. Super mega ultra turbo bullish on ETH on technicals right now. Lastly, let me just mention the ETHBTC fund and DeFi portfolio. I trade for Techme Capital Enzyme Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation, Curve having a big day, Link having a big day. You can see all the performance of everything here. You can see deposits, withdrawals. The funny thing about this is in crypto, especially when you have an open-ended fund or portfolio like this where people can deposit and withdraw whenever, you see a lot of people withdrawing kind of at the worst times. Not to like throw shade against any of these people. You do you, whatever is best for your portfolio. But it's funny to see people withdrawing at the bottom relative to where I think this stuff could go. I think the ETHBTC fund especially could do extremely well. This is the best month on record so far. It's very likely to close 30%. We're not seeing too many withdrawals here, but you can also trade these shares as a price chart as well. Buy the lows, sell the highs, sort of thing. But anyway, lots of fun to be had in the enzyme side of things. That's all for this one. Like, dislike, comment, share, subscribe. Happy trading.